Did you know that in the last 50 years, every single US presidential election has triggered massive shifts in how American companies operate? But here's the thing, this time it's different. This isn't just another election cycle. We're witnessing something unprecedented. November 6th, 2024. The votes are counted. Donald Trump has won the presidency. And in boardrooms across America, CEOs are frantically rewriting their playbooks. Why? Because everything is about to change. Let me break this down for you. I've spent months analyzing data, seeing experts, and diving deep into corporate financial reports to understand exactly what's happening. And what I found is truly fascinating. You see, American businesses aren't just watching from the sidelines anymore. They're caught in the middle of what might be the biggest transformation of corporate America since the Great Depression. And it all starts with three numbers: 60, 15, and 450 billion. That's 60? That's the percentage tariff Trump has promised to impose on Chinese imports. The 15th? That's the new corporate tax rate he's pushing for. And that 450 billion? That's how much companies invested in green energy under Biden's policies, investments that could now face a dramatic reversal. But before we dive into what's coming next, we need to understand how we got here. Let me show you something interesting. Back in the 1980s, American corporations operated under a simple rule: maximize shareholder value. That was it. But over the decades, something started to shift. Companies began facing pressure to consider more than just profits. They had to think about climate change, social responsibility, diversity, things that weren't even on the corporate radar 40 years ago. By 2020, this new way of thinking had become mainstream. Major companies were pledging billions to fight climate change, reshape their workforces, and transform their business practices. Even Wall Street giants like BlackRock were pushing for change. But then something interesting happened. The pendulum started swinging back. And that brings us to today, where Trump's victory is about to accelerate this reversal in ways that will affect every single company in America. But before we dive into what's coming next, we need to understand how we got here. And to do that, let's look back at what happened during Trump's first term. When Trump first won in 2016, corporate America wasn't sure what to expect. But what happened next was amazing. Look at this chart. The stock market soared. The S&P 500 jumped nearly 70% between Election Day 2016 and the end of 2020. Why? Because Trump delivered exactly what corporations wanted: lower taxes and fewer regulations. In 2017, Trump pushed through the biggest corporate tax cut in American history, dropping the rate from 35% to 21%. Companies like Apple and Microsoft brought billions in overseas profits back to the US bank. Profits hit record highs. The energy sector boomed as environmental regulations were rolled back. Now, some say that it wasn't just about tax cuts and deregulation. Trump's first term fundamentally changed how companies operated. Those CEO advisory councils Trump created. At first, corporate leaders were eager to have a seat at the table. But then something changed. After Trump's controversial response to the Charlottesville protests, dozens of CEOs resigned from these councils. Companies suddenly had to navigate not just policy changes, but intense public scrutiny of their relationship with the administration. This created a new dynamic in corporate America. Companies had to balance the benefits of Trump's business-friendly policies against potential backlash from customers and employees. Some companies stayed quiet. Others became more outspoken on social issues. Now, as Trump returns to power, corporations know exactly what to expect. They've seen this movie before, but this time everything's bigger. The stakes, the changes, and the potential impact. Let me show you exactly how I think this is going to play out. First up, trade. Trump's promise of a 60% tariff on Chinese imports. But what does that actually mean? Right now, when a company like Apple brings in an iPhone from China, they pay a small tax, usually around 7.5%. Under Trump's plan, that tax would jump to 60%. So a $400 iPhone? Add another $240 just in tariffs. But here's where it gets complicated. Companies like Apple don't just buy finished products from China. They're part of what we call a global supply chain. Let me show you what that means. Take that same iPhone. The screen might come from South Korea, the camera from Japan, the processor from Taiwan. But all these parts get shipped to China, where they're assembled into the final product. And under Trump's plan, that final product, even though it contains parts from all over the world, would get hit with that 60% tariff when it enters the US. Now multiply this across thousands of products. Walmart, for example, imports about $50 billion worth of goods from China every year. Everything from toys to electronics to clothing. Adding 60% to that cost would force them to either raise prices dramatically or find new suppliers. These companies are already scrambling to adapt. Some are moving production to countries like Vietnam or India. Others are looking to bring manufacturing back to the US. But here's the thing. This isn't as simple as just changing shipping routes. Let me give you another example so you can see this is not about just one group. Take Tesla. Even though they build cars in America, they rely on Chinese companies for most of their battery components. A 60% tariff would force them to either absorb massive costs or completely rebuild their supply chain. But trade is just the beginning. Trump's corporate tax plan is about to shake things up even more. Remember that 15% corporate tax rate I mentioned? Right now, companies pay 21%. That might not sound like a huge difference, but let me show you what it actually means. For a company like Walmart, which made $25 billion in profit last year, that's a difference of $1.5 billion in tax savings. That's enough money to build 15 new distribution centers or give every employee a $750 bonus. But here's where it gets really interesting. These changes aren't happening in isolation. They're part of a broader shift that's going to reshape four key areas of corporate America: energy, technology, banking, and manufacturing. Let's start with energy. Under Biden, energy companies were pushed toward renewables through incentives and regulations. Trump has promised to reverse this. He's already pledged to unleash American energy by rolling back environmental regulations and reviving fossil fuel projects. For companies like ExxonMobil and Chevron, this means green light for new drilling projects. But for renewable energy companies, it's a different story. Many are already seeing their stock prices drop as investors anticipate changes to federal support. Now, let's talk tech. The tech sector is bracing for major changes, especially around AI regulation. Trump has promised to cancel Biden's executive order on AI oversight. This could give companies like OpenAI and Google more freedom to develop AI technologies without government intervention. But there's a catch. Trump's tough stance on China could complicate things for companies like NVIDIA, which relies heavily on Asian manufacturing for its AI chips. And his immigration policies could make it harder for tech companies to hire foreign talent. And of course, that's not all. Banking is another sector that's about to see big changes. Trump has signaled he'll roll back regulations on banks and financial institutions. This could mean easier lending requirements and fewer restrictions on trading activities. But it also means banks will need to navigate new rules around ESG investing and diversity initiatives. And that brings us to manufacturing. This is where we might see the biggest changes. Trump's tariffs, combined with his push for reshoring, could fundamentally alter how American manufacturers operate. Companies that have spent decades building global supply chains might need to completely rethink their strategies. But here's what makes this moment so unique. Unlike previous elections, companies can't just wait and see what happens. The speed and scale of these changes mean they need to start adapting now. So, what are some companies already doing? Some are stockpiling inventory ahead of potential tariffs. Others are accelerating automation to offset higher labor costs. And many are revising their long-term strategies to align with the new political reality. Take Ford, for example. They've already announced plans to scale back their EV investments and refocus on hybrid vehicles. Or look at Intel, which is accelerating its plans to build new chip factories in America. But here's the thing that really matters. These changes aren't just affecting big corporations. They're going to impact every business in America, from small manufacturers to local retail stores. And ultimately, they're going to affect you. Higher tariffs could mean higher prices at stores. Changes in banking regulations could affect your mortgage rates. And shifts in energy policy could impact your utility bills. What does all this mean for the future? Based on the data and expert analysis, we're looking at three major trends. First, a shift away from globalization toward more regional and local supply chains. Second, a pullback from ESG initiatives as companies refocus on traditional metrics like profit and growth. And third, a new wave of corporate consolidation as companies try to build scale to handle higher costs and regulatory changes. Now, while these changes might seem dramatic, they're really part of a larger pattern. Throughout American history, presidential elections have always triggered shifts in how businesses operate. What's different this time is the speed and scale of these changes. In the past, companies had years to adapt to new policies. Now, with global supply chains and instant communication, changes happen almost overnight. A single tweet from the president-elect can send stocks soaring or plunging within minutes. So what should we be watching for? Over the next few months, keep an eye on these key indicators. How quickly companies start shifting their supply chains away from China. Whether banks start loosening their lending standards. How energy companies adjust their investment plans. And most importantly, how these changes affect employment and consumer prices. But remember this, while elections can change the rules of the game, they don't change the fundamental nature of American business. Companies will adapt, innovate, and find new ways to grow. They always have. What we're witnessing isn't the end of corporate America. It's just the beginning of its next chapter. And that's where we are today. A moment of massive change, where every company in America is reviewing and gathering its board of directors to ask, how will we prepare for these changes now? Some will thrive, others will struggle, but all of them will have to adapt to this new reality. The next 4 years are going to reshape corporate America in ways we're only beginning to understand. And whether you're a CEO, an employee, or just someone who shops at the local store, these changes are going to affect you.